Welcome back to Frequently Asked Questions. I'm Chris Passmore, your social media CPA. So one question I'm getting all the time lately is, what is the FDIC and how exactly does it protect the money I have in my bank account? So we're going to talk about that today. And I want you to pay special attention at the very end. I'm going to share how you can get up to 5 times the normal coverage of your cash accounts. So first things first. What is the FDIC? What does the FDIC stand for? So it's the Federal Deposit Insurance Corporation. It's an independent agency set up by the U.S. government with one sole purpose in mind, and that's to ensure that your bank deposits are safe up to an established amount. The government wants you to feel that you can safely put your cash into your local bank and know that you'll have access to it one day. So let's talk specifically about what's protected, how much is protected, and what's not protected. So it's important to know the specific types of accounts at your bank account that are covered by FDIC insurance. And that includes your checkings account, your savings account, money market account, and CDs. And you have coverage or protection up to $250,000 per depositor. That's important. Keep in mind, per depositor. So if you're a single person, you have up to $250,000 in coverage. If you're a married couple and you have a joint account, you have up to $500,000 in protection from the FDIC. So in those situations, if there's ever a failure at your bank, you can rest assured that you'll have those monies back to you. So now let's flip it around. What's not covered with the investments or the monies you have at your bank? Well, that's traditional investments. That could be stocks, that could be bonds, that could be mutual funds or life insurance. Those items are excluded from FDIC coverage. So those particular assets would not be protected and you would not be reimbursed by the FDIC. So I promised I'd save the very best for last. How can you get extra coverage? How can you get up to 5 times the $250,000 that comes with all other accounts? Well, you can set up a living trust and set up a bank account under that living trust. And just so you know, a living trust is revocable. That's not something that you're stuck with for the rest of your life. And you can add up to 5 beneficiaries. And guess what? Each beneficiary gets up to $250,000 in protection from the FDIC, or $1.25 million. Now think about that compared to the traditional $500,000 if you're a married couple, or if you're single, that's $250,000. That's a significant increase. And you're probably thinking, well, I don't want to give my money to 5 different people. Well, you can structure your living trust so maybe the first 2 beneficiaries, let's say your children, they get 98% of your assets, and the remaining 3 people get a small portion, 1% of your assets, or something even less. So you can still accomplish the goal of having most of your assets go to your prime beneficiaries, but still have those additional folks so you get that extra coverage. So you can note that's significant, going from $250,000 to $1.25 million of FDIC insurance coverage on your cash. Well, I hope you found that information useful. If you'd like more information, please reach out to me on my website. That's socialmediacpa.com.